Good morning. Happy Friday, everyone. It's another beautiful, chilly spring day here in the Midwest. The date is May 8th, 2026. This is the pre-market morning report. My name is Joseph Lackland. Thank you for stopping by today. I turned on my screen this morning, and of course, just like you, I saw more of the same. U.S. conducts new Iran strikes along Hormuz corridor. Trump says warships came under fire by lunatics. Well, that's what happens when you park your ships in foreign waters and basically conduct acts of war on foreign countries. Lunatics will just unexpectedly show up and try to do something about it. April payrolls review, a big drop from March. Here's how to trade it. Well, fundamentals really don't matter too much in this market. It seems to move the most with war headlines and Trump Truth Social posts. So this is a small, maybe nominal influence on what's going on, but I really wouldn't put too much emphasis on April payrolls review. So mega drought, we just experienced the driest first 3 months of the year in U.S. history. That this is going to definitely affect us going forward, but maybe we'll just print more crops. That's the answer. We're going to print more crops to solve this problem. So let's not worry about this problem. Gilt yields fall as Starmer vows to stay on after Farage's reform. UK storms to historic gains in midterms. Okay, more political nonsense. Really don't care about that. Payrolls feel like a sideshow, getting structurally bearish energy again. I don't know why we would be getting structurally bearish energy, but maybe Goldman knows something that we don't. After all, they do have some of the smartest and most sophisticated minds in the world on task to gauge whether or not these financial instruments are going to go up or down. So they're the best scientists in the world are working at hedge funds. They should actually be, working at NASA, trying to figure out how to do more exciting things like, maybe travel to Mars with Elon or go explore the moon again like they did recently. But that's neither here nor there. We have 120 quadrillion tokens monthly by 2030. Goldman's deep dive into the coming agentic economy. Well, I do use machine learning and these large language models every day, and they are quite powerful, and more people are using them. I don't think that it's going to save us from anything, however, because we can't seem to get it together. So what good is the power of AI when we can't even get it together? Iranian army commando sees oil tanker over export disruption claims. Well, there's going to be more conflict over there. We're building up more military forces. There was a ceasefire that appears to be off now. There was a pause that appears to be off now. There was a negotiation and a deal right at the beginning of the week. That's what sent the crude oil down 13%. And now the market's at an all-time high. And now U.S. conducts new Iran strikes. We're still pumping up the war, but we're just not going to really officially recognize it at this point. So if we stick with the facts, the war continues, the Strait of Hormuz remains closed, and the cumulative deficit of oil to the world's supply is at around 13 million barrels. I had Claude make us another handy graph here. And the prompt I gave it was, make me a weekly deficit until September, assume that the strait remains closed, then plot a 3-month forward to demonstrate the lag effect. As of right now, the war is continuing, the maximum damage is occurring. So as long as the war continues and the strait remains closed, this is what's happening. We are missing 13 million barrels a day from the world crude oil supply. This is cumulative. This builds up and builds up and builds up. The oil has to come from somewhere. We cannot magically print oil and gasoline like we print money to support risk assets and bonds. Please excuse the noise here for 1 second. They're resurfacing the street. This is the reality we find ourselves in today, where the stock market is on an all-time high and continues to press the high, while the Strait of Hormuz remains closed, and we have the biggest energy crisis in history happening right now. And everybody is so high on AI and debt that we are ignoring reality. So this is going to persist for a while, but eventually the laws of physics will kick in. I'm trying to figure out how they're going to run all these AI data centers with no power. So this is a great, wonderful thing that's happening here, this AI revolution, but there's just a small problem with that, and we need energy for these data centers. We need power, we need electricity, we need, you know, hardware that plugs into the electricity and power. We're having problems getting rare earth minerals and materials and supplies out of the Persian Gulf because this is occurring. So the world is continuing to operate under the notion that it can operate the way it has been for the last several decades without interruption. Well, we have a major interruption here. So something has got to give. So the weekly deficit is 91 million barrels, 13 million barrels a day for 7 days. Cumulative by September 5th is negative 2.73 billion barrels. That is with a B. 27 weeks of closure. Deficit end of lag, negative 3.1 billion barrels. If this is December, this is automatic. If the Strait is not open by September 5th and they stop the war on September 5th now, the deficit is still going to grow after the war stops. The production does not go back to 100% capacity right away. Versus the largest prior crisis at 6.8 roughly million barrels a day, 1973 embargo total, confirmed weekly deficit here in red. Projected deficit, Strait still closed, forward lag, Strait still open. So there's a decay here. You can see that this is the damage week by week. This is the decay in damage. We're going to experience the maximum effects of this while the decay is still in progress, because now stockpiles have dwindled down to basically almost nothing. There's shortages everywhere. The compounding effect of energy shortages everywhere affects everything else in the economy. The agricultural market is probably on the way to blowing up next. So first it was the metals that blew out to the upside 6 months ago. Then there was a catastrophic crash in metals associated with a bunch of news headlines and exchange margin requirements and all of that. And then there was the war, and then the energy market exploded. And then there was a whole bunch of, chaos and confusion and news headlines and violent swings like we've been watching for the last several weeks. And now probably this is going to happen in the commodity agricultural market, because these are the downstream effects of all this other stuff, right? So we have the money system becoming completely unhinged, metals freaking out, then the war breaks out in Iran, energy market freaks out, and now we have shortages, and now we have the agricultural market, which is going to be affected by this with the fertilizer and the lack of, liquefied natural gas and everything else, right? So this is a snowball effect. This is the biggest snowball ever that's rolled down the mountain. And we're at the bottom of it, high on hopium and AI. And somehow this is going to work out, right? I don't think so. I don't think this is going to work out magically. This is not going back to normal anytime soon. So if we look at the chart, NASDAQ on the all-time high, still 29,000 almost. Excellent. The NASDAQ will be at 50,000 at this rate, and gasoline will be at about $10, $20 a gallon. That's if you can get it. The ES 7,400, won't spend too much time with that. The gold is starting to come back, so people are realizing that they actually might need gold, but I don't know how useful gold is actually going to be without gasoline. I think that the gasoline is probably the most important instrument on this chart to be following right now. 344.47 is the last trade in the RBOB futures. That is still massively elevated. It's not going down anytime soon. And remember, this is a 1 month forward price of gasoline. So even if this price crashes significantly, prices are still going to be elevated at the pump a week from now. And even if there's some news headline or some justification on why the crude oil market is going down or why the gasoline is going down, let's just stick with the facts one more time. The war is still going. The Strait of Hormuz remains closed. And that's it. It's very, very simple here. It's nothing complicated for us to figure out. We don't need to spend hours and hours and hours with teams of data scientists going through the model of how this is going to play out. Eventually, we're going to run out of energy. So something definitely has to change here. Now, if we run out of energy, the war will stop by default because there won't be any gasoline to power the ships and the jets and the missiles. So that's an entirely different subject that we can explore later if that does happen. I think that something will definitely happen before then, before we run out, but I'm not sure. So gasoline at 344, crude oil at $95. The range is 98.5 to 94. So we have about a $4 or $5 range with a whole bunch of chop. The market just really cannot do anything. It continues to just chop around in a small range, and then some news headline will come out and it will explode violently and move in one direction. So it's very unpredictable. It's very clear to see what's happening here, but the prices of things are very unpredictable in this particular market. We see that the Nasdaq opened near the low of the session and basically drifted up throughout the entire session. This is setting the price. The price is being set right here. So it's not really trading. It's just moving. So there's not a whole lot of trading going on here. There is a drift here because there is either a consistent bid or there is a lack of selling. Everybody's tired of shorting the market and getting killed. I don't blame them at all. But this is a price setting. So now the market is actually starting to move here. This is the 730 number that came out earlier. Here is the gold market. The gold is, a similar pattern. Opened on the low here, drifted up, is kind of chopping around. There is some activity in gold. Weekends are usually pretty news saturated. So weekend risk is a factor for metals, energies, and stocks. So we see the weekend risk effect here on Fridays. The market usually will trade around for the first couple of hours, and then the last couple of hours are the weekend de-risking or the weekend, positioning for the larger players. So the morning session is going to be what I'm watching the most, and I usually don't pay too much attention to what happens in here on Friday afternoon. So that is the gold. That was the Nasdaq. Here's the ES. The ES trades pretty much just like Nasdaq. So open on the low, price setting move, drift higher up, came to the high that was made first yesterday, turned right around, and is now going down. So the market is technically behaving somewhat normally today amidst a backdrop of complete fundamental disconnection. Unless there's something that I haven't thought of, or there's some magical solution out there that they're going to roll out in the next day or two. Basically, the war stops today, and then this decay effect will start to kick in. And then while the decay effect starts to kick in, things are going to continue to get worse until the decay goes all the way to zero. I forgot to mention that this gray line here is the 1973 equivalent. So we are way past that. We are way past the historical analog for this particular type of crisis. So the magnitude of this is off the charts, basically. Good luck out there. I know that was a lot, but I'm going to try and keep it short. Hopefully, I will get some more good script demonstration videos together. They have not been good due to the activity of the market. There were a few news headlines to catch, and the data feed was a massive problem while those news headlines were hitting. So it did not make for a very good script video. We've definitely had some massive data feed problems when these news headlines come out, when these stories hit, and when the market goes crazy and attempts to reprice everything all at once. I'm hoping that gets a little bit better. So once again, thank you for stopping in. We're going to have some more good videos next week. I'm getting my groove on. I'm starting to, get into a good mode with how I'm presenting the material and what the market's doing. And the picture is becoming a little bit more clear here. For the last several weeks, I really had no idea what to make of all this, but now the facts are starting to come to the surface and I have a story to actually tell in a clear and concise manner. So until next time, take care, and I will see you on the next one.